Hey all, just a little primer just to give you a little incentive, encouragement, and that sort of thing. Seems like, again, many of you are getting a lot more comfortable with QuickBooks. I'm glad for that. I don't want to stress you out too bad. Bookkeeping's nothing more than adding and subtracting. You got to keep reminding yourself of that. Sometimes we can get wrapped up in some of the acrobatics and things like that. Um, and if you need any help, be sure and get a hold of me. You can email me or call me during the week at my office. Well, this week we're covering Chapter 5, and the crux of the matter is that we're going to talk about just some general accounting stuff throughout the chapter and have you practice some more on transactions. And there's a lot of adjustments that we have to make during the year, or especially towards the end of the year. And we're going to talk about those and have you practice those through this chapter. Um, when some of the adjustments that are big would be, of course, your depreciation to some of the assets that you have control of. So they're going to decline in value. Maybe we might only set it up for annually, but we certainly could do it on a monthly or quarterly basis with a record keeping system like this. And many businesses do it that way. In the case of an agricultural operation, of course, that'd be all your machinery. It could be also your livestock that produces income, like your cows, your ewes. If you had hogs, then those would be depreciable assets. And again, any long-term assets like improvements, fences, um, uh, barns, buildings of any kind, and things like that. So they're going to decline in value over time, and we're going to make those adjustments towards the end of the year at the very least, and maybe periodically throughout the year. In this chapter, we're also going to talk about actually making those adjustments to prepaid expenses. Some of the ones that would be very common in an agricultural sense, and you might think about, would be changes in inventory. We may be using some of our hay to feed to different enterprises within the operation, and we would make those adjustments from time to time in order to adjust them, assess a cost to a particular enterprise and that sort of thing as we transfer it. And of course, as we feed it, we're going to have less, and that needs to be recorded onto our books as well. So all those kinds of things actually play right into our bookkeeping systems. This chapter, we're also going to deal with something that happens on a regular basis within small businesses like ours and farms and ranches, is owner withdrawals. Okay, a lot of times we just take a draw rather than take a wage, and that's a very common thing. That's one of the things that we do within our own business that I run. And there's some tax benefits to that sort of thing. You need to kind of visit with an actual accountant to see whether or not you should be doing that. And most of you probably are. QuickBooks itself does not have any special closing type procedures. You can just leave it open. There is a little bit of a danger in that, is that in that you don't want to be able to go back and change something that you've already reconciled. Okay, and so QuickBooks has made a workaround to that, in that you can close it by date. Once we get done with, say, this year, 2017, at the end of 2017, we have actually done everything we need to do with our books. We need to turn them into an accountant, maybe for the tax assessment, the final take on those numbers and things like that. We might actually make a closing date of the fiscal year December 31st, 2017. QuickBooks allows you to tell it which date is the end of your fiscal year, because some companies have different fiscal years, especially if you're working under a regular corporation. you may have chosen a different fiscal year rather than a calendar year, like January through December. Many businesses operate in the realm of July through June, for instance. So that certainly could be, an option that you might have. Although the most common one is from January through December. QuickBooks also transfers at the end of the year, your fiscal year. Your net income automatically goes into the retained earnings portion of your books. So those are different accounts, and of course retained earnings are just those the net income or profits that were retained into the next year. Okay, and you can accumulate those throughout the life of the business. So those can be generated, or they can be cumulative as far as that goes. So that's all I wanted to talk to you about. I'm trying to make a shorter video for you. Hopefully this is getting kind of interesting to you. Just give you a little more encouragement in the fact that keeping good books is kind of exciting. And you might say, well, he's a bookkeeping geek or something like that, and maybe I am, but I'm not into actually recording things just to record them. The end result is that I get to see, or you get to see, whether or not you're profitable, and you can match up, and you can actually come up with some really good budgets as you go along. This is a practiced art. You're going to have to flex this muscle quite a bit before you get really good at it. But once you do, it'll be a lifetime skill that you can take on and use until the end of your life. So I appreciate any feedback that you have, and let me know if you need anything in the meantime.